See what Ross Gerber thinks he's up to. He's the president and CEO, of course, at Gerber Kawasaki Wealth and Investment Management. So why the timing, and what do you think investors should be watching here as Elon finishes his trip up in China, Ross?
Well, firstly, it seems to be a very successful trip just right off the bat, and even on a larger scale, really changing the tone of U.S.-China relations when you see the opportunity and the positive vibes that can be made by working together with China versus, treating them like an adversary. And so, I think it was really positive for America in a lot of ways because they respect Elon so much in China and he's been so successful in China. But what we're getting out of China right now, it looks like they're going to release some sort of specs or what the look of the new refresh Model 3 looks like. And that's kind of exciting because they need to refresh the product. And it just seems like the Chinese is just as loved with Tesla as they've always been. So that's great news for Tesla.
What does that mean in terms of deliveries relative to the Chinese companies? The last batch of deliveries we got from some of the China automakers seemed a little soft.
Yeah, I don't think you can extrapolate out from the Chinese automakers what's happening with Tesla because they all have very unique and individual problems and challenges that are different than Tesla's. But what we're seeing from China data is, they're having a very strong quarter in China. The price cuts have certainly worked in getting more consumers to buy the vehicles in China. And we expect the biggest issue across the globe is actually the slower global economy led by the Fed's outrageous, policy decisions to basically put the global economy into a recession. So that's the biggest issue with China and the United States is really the economy.
Okay. As Tesla trades at $200, it looks fairly uneventful on the chart relative to some of the other stuff in this AI craze that's gone ballistic. I thought that Tesla was one of the main AI plays. We're hearing all this stuff about ChatGPT. Okay, maybe I'll get a new Bing or whatever. Maybe there's going to be some product, but there's literally cars that are driving themselves. How come Tesla's been so sleepy the last couple of weeks? I mean, I know it's rallied a little bit, but...
Well, yeah, it's up 20%, in the last couple of weeks since the shareholder meeting. But remember, Tesla is not a cheap stock. It trades at the same forward PE as NVIDIA today. So NVIDIA really actually just caught up to Tesla when you look at forward PE because NVIDIA had this massive increase in earnings estimates for next year to over $7. So when you actually look at the fact that Tesla's earnings are going down this year, compared to NVIDIA's, which are actually going down a little bit this year, but really jumping next year, where Tesla's earnings are also supposed to jump next year, but to a much lower level. So, I think that both companies are valued the same if you look at their forward PEs, and they're some of the most expensive stocks in the tech market and in the stock market. So I don't think that Tesla is not being appreciated for full self-driving at all. It's worth like $700 or $800 billion, this company.
All right. Yeah, fair enough. I guess valuations still...
it's just we already knew that. We already know that Tesla's the leader in AI. And actually, we already knew NVIDIA was the leader in AI.
That's what I thought.
Right. But I mean, that's actually our number 2 position. So, boy, it's been a good month for our shareholders. My God. I thank you, AI. But that said, NVIDIA has been a great company for... we've owned it for over a decade, so the fact that they're also the leader in crypto chips and gaming chips, right, and autonomy chips, NVIDIA is in a phenomenal position, just like Tesla is, to profit off all these new technologies in the future.
Okay, maybe Tesla's share price already had some of that baked into it. Now we all make the realization of NVIDIA, but yeah, it seemed like that was been pretty well telegraphed too. Ross, what's with this Tesla Ford combo? How come Elon doesn't want to get dirty and keep them out of his charging stations?
Well, the purpose of Tesla was to advance sustainable transportation. And so when you think about the Tesla charging business, Tesla charging is the best charging experience that anybody could want with the EV business. And Tesla's changed the model from building, like 10 to 20 superchargers in a location to the new location in Santa Monica has 150 superchargers, and there's always one open if you need it. And so Tesla's thinking about massive scale of their charging business, and they want to have customers, as many customers as possible, like it would make sense for them for the infrastructure investment. Plus, opening the charger network allows them to get subsidies from the U.S. government. But this is a bigger thing because it's a benefit to Ford. But remember, Ford owners have to pay to use this supercharger network, and they pay a premium over Tesla owners to use the supercharger network, and therefore it's much more profitable for Tesla to have outside users of the supercharging system than just Tesla owners. But I think for Tesla owners, we have to accept that the supercharging system isn't a walled garden like Apple, and it's really an open system for EV companies. And the more companies that adapt the Tesla standard, the better for the EV community and the growth of the industry as a whole.
All right. Thanks for the check-in. Ross, seems like you're excited about the last couple of weeks. I can feel it in the energy with NVIDIA and Tesla. All right, appreciate it, Ross. Yeah. President and CEO Gerber, Kawasaki Wealth and Investment Management.